Hi everyone. Just wanted to jump on this morning, and I'm joined by Lisa and Karen, who are two local mortgage brokers that we work with. And we're getting a lot of noise and questions at the moment around mortgages and what the mortgage market's doing. And I think everyone would agree it's probably been a little bit crazy the last few months, or few weeks, I should say. So we thought rather than kind of answering everybody's questions individually, I'm no expert. So I asked Karen and Lisa to jump on for a little bit this morning, and just really to give us an update on what the property market in terms of mortgages is doing. It's not all doom and gloom. And then we've also got some questions and common questions that we get from customers, and that hopefully the two girls will be happy to answer for us. So thanks for joining us this morning.
Morning.
So yeah, I mean, I suppose over to you guys really, if you kind of want to introduce yourselves for those that don't know Karen and Lisa, and then we'll go from there.
Hi everyone. So we are part of the Cheshire Mortgage Group. The Cheshire Mortgage Group is our business, and we've been trading for a number of years. I originally set the business up. I've moved over from Stockport to Northwich. I changed the name from Karen Lee Financial Services to the Cheshire Mortgage Group because it sounds posher. It's got the word Cheshire in it. That's what I did. Expanded the business around here. Known Tom and Nicola from CW Estate Agents for probably not far, I think about 18, 19 years, and it was just a no-brainer that we worked together when they set the business up. I've been doing mortgages since I was 22. And in the business, there's our PA Dawn and a couple of other admin staff, Katie and Sue. And then Lisa works with me as well. So she works under the banner of the Cheshire Mortgage Group, but we are independent brokers as well. So I've got years of experience, know what I'm doing when things are not crazy like they have been, but we've just got to adapt and change. So just over to Lisa, really.
Hi, I'm Lisa. I do work under the Cheshire Mortgage Group banner. I've been in financial services for 15 years now. I've got my diploma in mortgage practice, which is the highest qualification you can have in mortgage practice, which I'm proud to say I did when I was 38 weeks pregnant, 2 days before giving birth to my son. So if I can do that, then I can definitely look after you and do your mortgage. I'm passionate about helping people buy the first home or remortgage and save them money.
Right, yeah. Thank you. So I suppose just to kind of pick up on a point Karen said there, that so me and Karen have known each other now for nearly 20 years. We actually trained as mortgage advisors together.
We did our mortgage exams together in Kettering for 6 weeks. And what a laugh we had. And on a Thursday night, we all went out and celebrated every week. Yeah. But yeah, that's how long we've known each other.
So Karen was brave enough to stick with mortgages, and I decided to leave. But so Karen and Lisa have worked with us at CW now for over 2 years. And what I will try and do is I'll share some of the reviews for these guys in the comment section. And we would only ever trust these guys to do our mortgages. And there's loads of mortgage brokers out there, whether it's banks or IFAs or whatever, but we would only ever use these guys personally. So that's why we trust them to pass our customers over. But also we trust them with our own family and our own mortgages as well. So I think that for me is kind of the highest praise we can kind of give to them. But that's really more than anything why we kind of wanted to use them today to hopefully, pass some good news over in terms of what the market's doing. So I suppose the first thing is you kind of give us your take on what's happened over the last few weeks. I mean, since our ex-chancellor now, God knows what he's doing, an ex-prime minister as well decided to do a mini budget. But it felt like it was off the cuff, and for a few weeks the world seemed to go mad. I suppose what was your experience of that? What happened?
So I've worked through the credit crunch in 2008 and 9. I've worked through mortgage market review in 2014-15. I've worked through COVID, and then whatever they want to call this. I think it's fair to say that I think there was a period of 2 or 3 weeks where it was just relentless. And the best example I can give is I was keying a mortgage application with HSBC. It took me an hour and a half to get on the system. I'll get told off now for naming them, but that's who it was. It took me an hour and a half to get on the system. I was halfway through keying it, and I get an email from the business development manager and a phone call. She's very good, Teresa, to say we're pulling the deals right now. So I've not even finished the application. Keying the application takes a good hour. That's just the lender's part, never mind everything else. And I was halfway through it and had spent all that time and it had gone. And there's nothing that we could have done about that. The rates were creeping up. They were about 3%. And then all of a sudden they went to 6.5% even if you had like a 50% deposit. So, and it was the sheer panic. Myself, Lisa, and all our other broker friends were working literally from 7 a.m. till midnight. We were exhausted because there's only so much you can do on a computer during the day. And we had people phoning up, wanting to come out of their deals that were 2% to pay the penalty to fix at 5.5% because they were panicking they were going to go to 10. Yeah. So that's sort of what we were dealing with. So we were just fighting buyers, and it was really hard. And if I'm honest, it wasn't very enjoyable because you want to do your best for your clients, but having to tell someone that the mortgage payments were going up by 400 quid a month is even if they earn the money to pay for it, it's not the point. It was a big increase. However, Lisa will tell you about the next bit.
Just to jump in, we found that, we had clients suddenly, it offered on properties kind of, phoning up going, we don't know if we can afford the property in 2 years' time. We don't know actually if we can afford the mortgage that we're on, how long is it going to be? And suddenly it just went into mass hysteria that people are going to start pulling out of offers. And luckily, touch wood, we didn't actually have anybody eventually that pulled out. Our advice was to speak to you guys or speak to their broker and just kind of take a step back, because it did just seem that for a week the world just went completely nuts. And
it was about 3 weeks, because even though it's in the media for a week, we have then the knock-on effects of what happens with it. And we were literally every single query we were checking it. And
was that bad? Can I just interrupt, Karen? My 3-year-old son said to me, "Mummy, are you on your computer again?"
Yeah.
So that goes to show I'd picked them up and I'd lodged straight back on my computer. But when the market's changing that quickly, I didn't have half an hour to sit with them. I had to literally log on the computer to make sure that the rates weren't changing, because we were getting no notice. As Karen said, it was literally being pulled when we were in the middle of application. So we didn't have the luxury of time on our side. But doom and gloom over, because I've got some good news.
Yeah,
rates are starting to reduce.
I suppose that was probably one of the big driving factors we wanted to do today, really, was because I think probably for about the last 10 days now, 14 days, at least some more so, we just keep getting, so we have like a WhatsApp group that we're all in. I just keep getting messages going, Nationwide's reduced the rate, so-and-so's reduced their rate, somebody else has reduced their rates now. So actually, but that doesn't seem to be all over the TV.
Bad news sells, Tom. Good news doesn't sell, does it? So I am trying to do a positive post a day on Facebook, because daily rates are changing and they're coming down quite considerably, to be fair. Some lenders by 0.5%. Well, in the market that we're currently in, 0.5% is a lot. I have got a headline rate wrote down. So there's a 2-year tracker at 3.69%. Weeks ago, if someone would have told me we would have got rates back down to 3% and a bit, I wouldn't have believed them. I would have thought they was telling me lies. And as brokers as well, we do get semi-exclusive deals and exclusive deals, which means if you went to the bank or building society yourself, you wouldn't get those rates. I've come from a banking background, so I understand that you can go direct to a lender. However, we've got access to 123 lenders. So why would you go to one lender when we can research the full market for you? It's a no-brainer.
And I think that's the point, that from being a broker, and broking's changed massively since I was a mortgage broker, but the way in which rates are changing at the moment as well, I suppose there's an element of there's a bit of a chase with it. I suppose that whatever's the best deal today for you could be completely different tomorrow, I would imagine. And actually, by putting your eggs in one basket, by focusing on one lender, are you actually going to get the best, monthly payment? Which is
it might not meet the criteria, Tom, as well. That's the beauty of using us. We will research the whole market for them, and we will find them a deal where they meet the criteria, where we know that they're going to get that mortgage. So say 6-7 weeks down the line, when everything's being checked and the valuation's being done, we know that that lender is highly likely to agree that mortgage at that rate.
And
yeah,
am
I
I
think
right?
that's the most important thing. I think that's the most important thing. Sorry, Tom, is to, I think me and Lee's other brokers as well, it can be hours researching it to make sure that we get it right first time. And then when we submit the application, it's going to get offered once we sent the documents. So I'd rather spend the time to make sure that if I'm recommending something to a client, they're actually going to get the offer and know what, not then something else later down the line. So the cheapest rates go hand in hand with making sure that we've got the right lender and it fits that client's lending policy as well. So you're right there, Lisa, definitely.
And I think probably touching on a couple of the points we spoke about, that am I right that from a couple of people that I've spoken to who are kind of work within the lending side of things, that actually lenders were pretty much as in the dark as the rest of us when it came to the mini budget, and actually a lot of the chaos and the rate increases was a knee-jerk reaction from them in terms of actually
they didn't know how to price, Tom.
Yeah,
they didn't know how to price. We've never ever been in this circumstance before. The world literally went mad.
Yeah,
and nobody knew what to do. So lenders was throwing rates out there because they were like, oh well, we don't know what's going to happen. So it was just so uncertain, the market. I just think they just threw rates out there, not thinking, and that's why they are slowly starting to decrease now, because they're seeing that the market is starting to stabilize.
So I think that's the positive, isn't it, for me?
Yeah,
definitely.
Rates are coming back down, so the cost of actually a fixed rate, a track, or whatever you decide to go on, and again, I'm probably quite traditional in terms of, I always think of, because me and Karen were talking about this over message the other day. I always like a 2-year fixed rate. I like to know what my payments are, know what they're going to be. But actually, looking at some of the deals out there at the moment, there's some really good trackers and different things out there that I think you probably need a broker to open your horizons a little bit in terms of what is the best, not necessarily just the mortgage payment, but what's the best product for you, what's the best type of mortgage for you as well.
So I've got 2 examples on that. So the tracker rate is not necessarily the end of the world. And I think if you've got disposable income, that is, it's not a bad option, and you are comfortable with the rates increasing. And I've just done a mortgage for a friend of mine, and he's gone on a tracker because it was about £350 a month cheaper than the 5-year fixed rate.
Yeah.
And he said, but he's got disposable income and he's got savings. And he said, even if I fix it next year and it happens to be a higher rate, I've still saved so much money in the meantime. So that was his point of view.
Yeah.
On the opposite side, I saw a couple last week and the disposable income isn't that much. So I've said they should fix it. So we can tailor make it to each client. And just to give you something else of how positive things have becoming, between myself and Lisa this month, so what are we, 24th of November, I've done 1 right to buy, so that's where people are buying the council houses. I've done 2 buy-to-let purchases. We've done 6 remortgages between us from existing clients. 2 of them I don't think are existing clients. We've done between us 6 purchases. That's first-time buyer purchases. And we've done 1 concessionary purchase where someone's buying off the family. So that's what we've done so far, and then there's still more to do. Yeah. So it is going in the right direction. So this myth that no one's buying houses, we've got 6 first-time buyer purchases there, and then other stuff as well, some buy-to-lets going on.
I think that
and clients out looking.
And
yeah, I was about to say that kind of backs up kind of where we're at. That look, I think the number of people that are actually viewing houses and are looking at registering with estate agents at the moment is less. I mean, some of the right move stats are about 33% less. And people use that as a negative. Actually, it's just normalizing probably a little bit. That we couldn't continue at the same kind of levels that we were, because there's only so many people that can buy a house. So I think that
sorry, Tom, you've just become a busy fool where you're doing 20 viewings for 1 house and then people are fighting against it. So I've just done an appointment early this week for a first-time buyer that I saw in July, and she couldn't find anything because everything she was offering on, she was getting outbid by 10 other people going to sealed bids, houses going 20, 30,000 pound over the asking price at values of 200,000 that they're on the market for. She has now come back to me. We've redone a budget, and she said I'm more comfortable with paying the asking price, and she's finding it's not a battle to even get a viewing now. So she's hopefully going to offer on something this weekend.
And
so
I think
it's
that I was going to say, and I think that's what we're seeing at the moment, is that actually the market's still really busy, but it feels more like a normal market now. It seems like a fairer market. So I don't think there's any of this buyers or sellers market. It feels like we're in a good place for both kind of sides of the fence at the moment. So
definitely
cool. Okay, so I suppose what I wanted to also do today was I've put together some of the common questions that we get, and I kind of always wanted to fire them at you guys, really, for kind of, a few kind of snippets and kind of help. So one of the biggest questions that we do get is first-time buyers, and as you guys have just said, you've got loads of experience in that, is what kind of deposits now are you looking at for a first-time buyer? Because I'm gone the days where I was a broker and we could do 125% mortgages with Northern Rock.
Know your age now, Tom.
I know,
your age. Can I answer this one, Karen?
Yeah, you do it, Lisa. Yeah.
So first-time buyers need a minimum of 5% deposit. Family members can help with the deposit. So mum, dad, brothers and sisters, aunts and uncles and grandparents can help gift a deposit. So it might seem a far reach for some people, but when they know that family members can help them, it might be more achievable. If they want to speak to us regarding like gifted deposits, etc., we'll be more than happy to answer any questions based on individual circumstances.
Cool. And that probably ties in quite well, actually, because we're seeing quite a big spike at the moment in people thinking about downsizing. So whether that's through gas, electric costs, cost of living. So a lot of these people are looking to downsize, but they want to utilize that cash to pass on to their kids or grandkids or whatever and help them buy. So
you can gift equity as well, Tom. Sorry to interrupt. Say for instance, mum and dad were selling a house and daughter wanted to buy that house because they didn't want to let the family home go. Mum and dad can gift some of the equity in that property. It's a concessionary purchase, and they then don't need to put any deposit down at all. So that is another way around it.
I did one yesterday for my friend from the walking group, and that's what we're doing with him and his missus. And the mum and dad are selling it for less than the market value, but that invisible money equity is classed towards a deposit, and they've got a good deal.
And see, I've learned something new there, because I didn't even know you could do that anymore. So
you find a lot of grandparents do this because like a family home will have been in, the family for years and years, and sentiment and things, they don't want to lose that property. So you find grandchildren will then buy the property and have the equity gifted to them. So
5% deposit kind of is a minimum. Family can help, whether that's through a equity gift, I suppose, or through a gift. I'm assuming, though, as always, the more deposit you put down, the cheaper the rates become. Yeah, that's still
exactly.
So, okay, awesome. I suppose the next one was, I'm thinking of moving, but we're tied into our current deal. What should I do? That's kind of one we get asked all the time.
It doesn't matter. It's without using jargon, so I hate that. It's called porting.
Yeah.
So we can, in other words, it means that as long as you fit the criteria of the lender at the time that you're with, like the credit score and affordability, you can transfer the mortgage that you've got from one house to the other without you paying the penalty. So if somebody's bought a house a few years ago and they've got, let's say, 100,000 lend on a rate of around 2.5%, and they want to borrow another 100,000, we can take that 100,000 on that 2.5% rate to the new house, so they don't lose it. And then we do a top up on the difference, and then we pick a new rate on the difference. So actually, even with your existing lender, we can do that. And I actually personally enjoy doing those types of mortgages. I don't know why, I just like doing porting, because often the deals are quite good.
I was about to say, probably with the way in which rates have gone up, porting and existing deals most likely to be considerably cheaper than some new rates and products. Yeah,
that's correct. Yeah,
you know what, porting is, and you talk about jargon, Karen, it's probably, I'm actually probably going to do a different video over the next week or two around jargon, not just in the financial services world, but estate agents are terrible for using jargon.
Yeah, don't ask me.
when it comes to
I won't know.
these details that we type up and the words that we use. Vendor, you know, for us that have worked in a estate agency for 20 plus years, but actually, what does vendor mean? So vendor's the seller of a
first
house.
time buyer, it's a daunting task. I always say to all my clients, I will break it down in simple blonde terms so you fully understand it, and they do appreciate.
I'm not allowed to make any blonde jokes either.
No,
it's fine. Make as many as you want, Tom. But
we're all blonde. We're all blonde in the Cheshire Mortgage Group as well. We're all blonde, aren't we? And that's the criteria. That's what we say.
But you'd rather have it in simple terms, what they're going to understand, rather than loads of jargon that they're not.
Porting's one of the big ones that always comes up, and I tend to find I spend time explaining porting on valuations with people. So cool. Okay, good. I think that probably answers that one. So what about if I'm not moving at the moment, and when it comes to remortgaging? Because again, I think you touched on it earlier on, Karen, that a lot of people kind of you were talking about jumping off rates and paying early repayment charges just to get onto a deal because we were all being told rates were going to be 10%. If I'm thinking of remortgage at the moment, what's the best thing to do?
Just speak to us. If your mortgage is up for renewal in the next 6 to 7 months, then get in touch, because we can reserve deals 6 months in advance. And the reason why I'm saying 7 months is I've got a few people, existing clients, who have been in touch. Their deal is 7 months in advance. I've had a natter with them. I've told them what the rates are at the minute, but I've said, let's just hang fire for a week, because HSBC announced rate reductions from today, didn't they?
Yeah.
I think it's today, Thursday, yeah. So from today. So, and I was looking at HSBC, and a few of these lenders putting rates down. So it's always good, even though we're looking at 6 months in advance, the offer with most lenders lasts for 6 months from the date it's issued. So if I key the application 3 weeks earlier to secure a deal, that's just nearly 7 months. And then let's say if we time it right, we can get the offer issued. And lenders' timescales are 14 working days with some, so it might be all right with the timing. We get the rate book now, get the offer out. So and then it lasts for 6 months. So that's what they should be doing.
I think that's a really important point, isn't it? Because so many people allow their mortgage to come to an end and then almost jumps onto the standard variable rate. And again, I'm using jargon now, but jumps onto the lender's standard variable rate, and inevitably that will mean the rates, the monthly payments go up. Then they'll remortgage, or they'll look to remortgage. So the key there is, if your mortgage is coming to an end in the next 6 or 7 months, you need to be speaking to somebody. Yeah. Cool.
Previously, Tom, when they've gone on to standard variable rate, sorry to jump in, say like if they've done a 2-year fix or even a 5-year fix, when they've jumped onto standard variable rate, rates were low. So they wasn't scared about going on to standard variable rate. The market's still got a bit of uncertainty to it. So you do need to be doing things a lot sooner than you have done previously, which is where 6 to 7 months comes in.
Cool. So I'm conscious of time, so I've got 2 more questions for you. So I suppose the second to last one is, what kind of documents do I need to be getting? Because one of the biggest things that when we talk around is that you're waiting for this or you're waiting for that. Hit me with what kind of documents people need to be getting ready if they're looking to take a mortgage?
I'll do this because it's a pet hate of mine. So ID, simple, passport, driving license, proof of address. If you haven't got a passport, driving license, there's other things we can use. So speak to us about that. If you're employed, 3 months bank statements. If you're self-employed, 2 years accounts or 2 years tax computations and tax year overviews. 3 months bank statements per person and joint account. Proof of deposit, 3 month statements for that, or a gift letter to show us where it's coming from. Existing mortgage statement, existing life insurance documents. And the reason why we want all that, first of all, we have to be compliant. The FCA, Financial Conduct Authority, tell us that's what we have to do. We can't do a mortgage without documents. We need to get it right first time. We want to make sure that the mortgage company we're placing clients with will accept the documents that we've got, and it just speeds the process up. So not that we do, but if we wanted to submit a mortgage application with half the bank statements, half the pay slips, you send it all in dribs and drabs to the mortgage company, and I guarantee the underwriter will just put it to the bottom of the pile until they've got everything. But actually, we're not allowed to submit an application without the documents anyway. We're not allowed to, and we won't. And it's partly because mainly is, as I've said a couple of times, we want to get it right first time. And when we're sending everything, we're sending it all off in one go, so it speeds the process up. So documents is, I bang on about it all the time. The documents are really important.
If I'm viewing a house today, I'm really in my back of my head should be thinking I need to be getting them kind of documents ready already.
Yeah,
rather
definitely.
than waiting until I offer and then I've got to go and get this and request this from a bank. And yeah,
weirdly, people don't know what they earn, especially self-employed people. So you know, they can say, well, I think I earn £20,000 a year, but I bet you any money I'll get the pay slip and it says 18. Well, the difference with that is probably about £10,000 on what you can borrow. So it's got to be right. I don't know if
we usually ask for these documents before we do an agreement in principle.
Yeah.
So at the first meeting, we ask for these documents, so we've got them for the client. And then, say if some time has passed, they've only got to send us like the extra pay slip or 2 pay slips, depending on how long it's taken them to find a property. So it's just a matter of like topping the documents up. We ask for majority of the documents at the first appointment so we can get them an agreement in principle, and then we've got peace of mind knowing that they're going out viewing a house that they can afford.
Oh, yeah, makes sense. Okay, so I'm really conscious of time. We've got about 3 or 4 minutes left. So I suppose the last question is, why should I use a mortgage broker rather than actually going and kind of doing it myself? So you've got a minute each on this one.
Age-old question. Why would you not? I just honestly don't understand if even if you know how mortgages work and you're an experienced home mover or an experienced buy-to-let investor, lending policy changes and rates change often. If you are working full time, you don't have time to keep up with 120 different lender rates and lending policy. But also, you get us. We're nice. You know, we get on with. We've got clients for life. The first lady I ever did a mortgage for 18 years ago still uses us. And we will help people from the day that they speak to us until the day that they get the keys, and then when the deals are expiring. So we will push everything through and as fast as we can. We can't do everything. We're not solicitors, but we will look after our clients, and hand on heart, we will do. So, Lisa, what can you?
Having worked for a mainstream bank and then become a broker, I'd say we're worth our weight in gold. We will literally research the lender, we'll research the criteria to ensure that you are getting the mortgage that's right for you. And as Karen said, we're there to hold your hand from start to finish. It can be a daunting process, especially if you're a first-time buyer, but even remortgaging, because the market's changing daily, we're there to take that stress away. From you doing your first appointment to the day you get the keys to the property, or to the day the remortgage completes, and beyond that.
And I think, do you know what, from an estate agency point of view, we're constantly having battles with conveyancers and solicitors and surveyors. It makes our process of getting the house sale through as stressed. Look, we can never take the stress out of buying and selling a house. That's just estate agency rubbish if they try and say that they can. But the reality is, our job is so much easier. And these guys, in my opinion, are the best at what they do. But there are some of the good brokers out there. When we're dealing with a broker that knows what they're talking about, it makes everybody's life so much easier. The buyer, the seller, everybody's. And you know what? I think the biggest thing for me is just listen back to this video, and that'll tell you exactly why you should be using a broker. All the trials and tribulations. I made notes here about an hour just to log on, and then an hour and a half on a system to key a case. If you don't use a broker, you're going to do that yourself.
And if you're like me and you hate computers, you will not want to do that. we know what we're doing.
Awesome. So I think that probably gives us quite a bit of info for for everyone to kind of, digest. And I do think there's some really good points in there. Thank you both I know you've got busy days, so thank you both for taking the time. What I will do is share the links kind of for your page, and obviously we'll share your stuff as well. We'll also share your contact details. If anyone obviously has any questions, they can reach out. But yeah, apart from that, thanks for your time, girls.
And, thanks for everything over the last few years as well. So, but it's all good. Things are getting better. People can buy. So that's hopefully the message that's going to come out of this at the end. That it's not doom and gloom now. It's moving and it's good. It's good.
Cool. All right, guys. Right. Well, thank you very much. Take care.
See you later. Bye. Bye.